Thanks for watching Lessons in Minutes with Jaylee. Like, share, and don't forget to subscribe.
We're going to continue to look at accounting for a manufacturing industry. In our previous lessons, we have looked at terms associated with manufacturing industry, classification of costs relating to manufacturing industry. We have also looked at preparing the manufacturing account. If you have missed those lessons, the links are in the description below. Now, for this lesson, you should be able to prepare an income statement for a manufacturing industry. Yes, we're talking about that trading profit and loss account that we prepare in calculating the net profit. Now, when you're preparing the income statement, you're going to find that the concept that you use to prepare the trading profit and loss account for a sole trader, you'll be applying that concept in preparing the income statement for a manufacturing industry. Now, I'm going to break down the preparation of the income statement for a manufacturing industry into 5 simple stages. And yes, I mean 5 stages. So here we go. The first stage is that you're going to pick up your sales. Once you have that, your next aim is to calculate your cost of sales. And guess what? Once you have your cost of sales, you're going to subtract that from your sales to give you what we call gross profit. And hey, once you get to your gross profit, your next stage is to generate your expenses. You're going to pick up your expenses. And once you have that, we're going to subtract our total expenses from the gross profit, and that will give us net profit. And yes, that is the end of the income statement. Okay, now let us zoom into each of these stages. For sales, if it is that your customer returned some of those goods that were sold to the business, then of course that will be returned inward. So that is going to change our sales figure. So once there is return inwards, we are going to less return inwards of finished goods, and then that is going to give us net sales. Now, once you have that, and this is only if you have return inwards, then you would have net sales. Otherwise, it would just be sales. In calculating our cost of sales, which is our cost of goods sold on finished goods, our first aim is to pick up our opening stock of finished goods. Once you pick up that, your next aim is to add your purchases of finished goods, if there's any in the question. Now, if there's carriage inwards on finished goods, you're going to add that. And if there is return outwards of finished goods, you're going to subtract that. So the very same concept that you would use in calculating cost of goods sold, cost of sales for a sole trader business. Once you add your purchases, there's something that we're going to add. And that is the figure that we have generated from the manufacturing account, which is the production cost of goods completed. So remember, opening stock of finished goods, add purchases of finished goods, plus your production cost of goods completed. And from the figure that you would generate, which would have been your cost of goods available for sale, you're going to minus your closing stock of finished goods. And that would give you your cost of sales. Now, once you have your cost of sales, remember, we're then able to generate our gross profit. Now, the gross profit, people, is simply sales less cost of sales, and that will give you gross profit. But do remember that if the sales figure is adjusted for a return inwards, then this would be net sales rather than just your sales figure. If it is that there's any revenue, you're going to add that to your gross profit before you move into lessen your expenses. So in terms of our expenses, remember in our very first lesson, we had looked at terms associated with manufacturing industry. And you would have recalled that there are 3 categories of expenses as it relates to your manufacturing industry. And these are administration expenses, so anything relating to the office, accountancy, salary, depreciation of accounting equipment or office equipment, etc. Those would be administration. We have selling and distribution expenses. Your selling and distribution expenses, remember, these relate to the selling of the goods. So any cost relating to that, like your advertising, your carriage outwards, your sales force pay, your sales manager salary, etc. Those would be categorized under your selling and distribution expenses. And the final one is your financial charges, which would have been your discount allowed and your bank charges. So bear in mind that your expenses will be categorized and should be categorized under administration expense, selling and distribution, and financial charges. Now, if it is that you need more information relating to this, remember you can watch the lesson, which is in the link below, with terms associated with manufacturing industry. And tell you what, once you have your expenses, you're going to add all of that together to give you total expense. And once you have total expense, you're ready to calculate your net profit, which is gross profit minus total expenses. Okay? Now, let us look at a worked example. So we're going to use question 5 coming from 2008. That is May 2008, question 5. Now, bear in mind that you should always read your question before you start your workings. And this question read, Tea Terra Lounge Manufacturing at the following balances as at April 30, 2008. Your additional information overheads are to be apportioned as follows. Utilities, factories to get 70%. So the 70% of utilities would go to the factory overhead, while the office would be administration. Administration expense relating to utilities is 30% of the utilities cost, that 30% of that 15,000. Rent is to be apportioned as well. 50% goes to the factory, so that would be factory overhead, and the other 50% would go to the administration expense because it indicates that is office. Okay, if it is that you get a question and it said utilities, factory 70%, it did not tell you what to do with the other 30%. That is simply administration expense. So it's very important for you to read your question and carry out that instruction. Also, people, if it is that there is any accruals, any prepayments, you need to adjust that before you apportion between the factory and the office. So you need to adjust for your accruals and prepayments before you apportion the cost. What you're asked to do is to prepare the manufacturing, trading, and profit and loss account of Tea Terra Lounge Manufacturing for the year ended April 30, 2008. Your costs must be clearly identified. What costs are we talking about? Costs such as cost of raw material consumed, prime costs, factory overhead costs, your production costs. Those must be clearly identified. It also asks you for the trading and profit and loss account. So your costs such as your cost of sales, your gross profit, your different expenses, your administration, your selling and distribution, your financial charges, if any of those are there, should be clearly identified. And definitely your net profit. Now, ahead of time, what I've done is to prepare the manufacturing account, and it starts from the title. Don't forget your title. And because in this question you're asked to prepare the manufacturing and trading and profit and loss account, everything is going to be in one. But there are times when you're given a question and you're asked part A, prepare the manufacturing account. You're required to do the manufacturing account for that section. Part B, you're to do the income statement. It means that you're going to have a different account with your income statement. So it means that you're going to have two titles right here, one for manufacturing, which is related to part A, and for the other, you're going to have your income statement title. Now, to do your manufacturing account, remember, the first thing that you do is to calculate your cost of raw material consumed or used. And to get to this stage, we pick up the opening raw material figure, add purchases of raw material, add carriage inwards on raw material, and then that would give you your cost of raw material available, less closing stock of raw material, that give you your cost of raw material consumed or used. Your next aim is to generate your prime cost, and to get your prime cost, you add all other direct costs. In this question, we only add direct labor. Remember, if it is that, it indicated that it's factory labor, then of course that is also direct labor. And you add that to get your prime cost. Your next stage is to generate your factory overheads, and notice right here, utilities calculation is 70% of that 15,000 because you were instructed to apportion the utilities 70% for factory, 30% for office. So the other 30% will be in the income statement. Depreciation on factory equipment. Notice in the question you have depreciation of office equipment. That does not relate to the factory, so therefore it is not included there. That will be included in the income statement. We have rent. And again, rent must be apportioned 50% for the factory, and the other 50 must be used in the income statement. Once you have that, you're going to add it to your prime cost, then add your opening work in progress, then less your closing work in progress. And guess what? That gives you your production costs of goods completed, carried down. And it is carried down because you're going to find that it will be used in your income statement. So here we are now, people. As indicated earlier, our aim is to prepare the income statement for the manufacturing business. So we're going to move into preparing the income statement. So the first thing that we're going to pick up, as indicated earlier, that would be your sales figure from the question. Our sales is 500,000. Our next step is to look if there is any return inwards on finished goods, and there is no return inwards. Also, people, if you just return inwards, more likely it is relating to finished goods. Okay, so there's no return inwards in this question. So our next step is to less cost of sales. And our cost of sales calculation would be our opening stock of finished goods. And our opening stock of finished goods is 36,200. Our next step is to add purchases. And when you get to this stage, people, remember you need to look out for any carriage inwards of finished goods. And this is purchases on finished goods. Look out for any carriage inwards of finished goods, any return outwards of finished goods. If there's carriage inwards, you add that, carry out the usual concept. And if there is return outwards, you're going to subtract that. In this question, neither of them is there. So we are going to now enter our purchases of finished goods, which is 50,600. Bear in mind that not all questions will have purchases of finished goods. Our next step, people, earlier we have generated a very important cost, and that is the production cost of goods completed. This figure, right? This figure, guys, is transferred to the income statement because it's going to be added to the opening stock of finished goods and the purchases of finished goods if there is any. Okay, so that is added because it forms a part of your goods that you have available for sale. So it is add production cost of goods completed. And that value is 319,360. We're now going to add all three figures, that's your opening stock of finished goods, your purchases of finished goods, and your production cost of goods completed. And that gives us a total of 406,160. Now, people, this figure is referred to as your cost of goods available for sale. Now, from this we are going to subtract our closing stock of finished goods. So less closing stock of finished goods. And if you look in the question, you'll notice that there are three categories of goods. We have raw material, we have finished goods, and we have work in progress. Raw material and work in progress, those are used in the manufacturing account, while the finished goods are used in the income statement. Now, our next aim is to enter that closing stock of finished goods figure, and this is 47,000. And we're going to subtract that from the cost of goods available for sale, and then that would give us our cost of sales. So cost of sales. You can enter it in a different row if you want, like I'm doing now, or you could put it directly in this row. Having subtracted our closing stock of finished goods from the cost of goods available for sale, we have a cost of sale of 359,160. And guess what? We are now going to subtract that figure from the sales, and that is going to give us gross profit. Now, our gross profit figure is $140,480. Our next aim is to look out for any additional revenue, but in this question, there is no additional revenue. So what we're going to do is to proceed to less expenses. Now, remember that in a manufacturing concern business, we have three categories of expenses. So once you have any expense relating to any of those categories, you have to identify them. So we're going to pick up our administration expense, and our admin expense are, we have the first one, which is office salaries. And the office salaries figure is 34,800. And remember, people, once you have your expense, you need to look out for any accruals and prepayments and make adjustments accordingly. In this question, there is none, so we will not be adjusting for any accruals or any prepayments. Our next cost that we're going to pick up is utilities. And remember, the utilities must be apportioned to the office, 30%. So that's 30% of the utilities cost of 15,000. When we do our calculation, that value is 4,500. Our next cost that we're going to pick up is the depreciation of the office equipment. And that value is 5,400. Now, bear in mind that in this question, the depreciation cost was already calculated for us. They can test you on calculating depreciation in this very same topic as well, where they can either ask you to calculate using the reducing balance method or the straight line method. So it is very important that you read through your additional information. Our next administration cost that we have is rent. And the rent must be apportioned as well, and it is 50% to the office. So that's 50% of the rent cost of 29,000, and that gives us a value of 14,500. Now, based on the question, there is no more admin expense. So we're going to total this, and that gives us a value of 59,200. What we're going to do next is to check if we have any selling and distribution expense, and yes, we do. And once we do, we have to ensure that we label the section like we did for admin. Our heading is selling and distribution. That is selling and distribution expense. And remember, you're looking for those costs that are related to selling the products. And for this question, we only have one, which is carriage outwards of finished goods. So that's carriage outwards. And bear in mind that if you have more than one selling expense, selling and distribution expense, it would list them in this first monetary column, which is your calculation column. And then you would put the total in the middle column because you would need that figure to calculate your total expense. And in this question, because there's only one, we're going to use this middle column, and that value is 2,400. Our next aim is look out for any financial charges, but in this question, there's no financial charges. So therefore, we are just going to add our selling and distribution cost, which is 2,400, to the administration cost of 59,200, and that gives us total expenses of $61,600. Now this figure will be subtracted from our gross profit, and then that is going to give us our net profit. After calculation of our gross profit, which is 144.80, minus our total expenses of 61,600, we have a net profit of $79,240, and that is basically classified as the net income, same thing as your net profit. So that is it, guys, in preparing the income statement for a manufacturing industry. So remember, from sales down to net profit, that is the income statement. Now, we are required for part B to calculate the unit cost of items produced if 25,000 units were produced during the period. And you're asked to show your workings. And guess what? It is relatively simple in doing that. Yes, I say simple. It is. In calculating that, the formula is production cost of goods completed divided by the number of units produced. That is divided by the number of units produced. And what we're going to do now is pick up those figures. So bear in mind that the production cost of goods completed, there are two places where you can find that figure. It is basically coming from your manufacturing account. And if you're asked to prepare the income statement, that figure is there as well. So this is a figure that we're using, which is a 319,360. That is the cost of production. So that is 319,600. And we're going to divide that figure by the total number of units produced. And in this case, the total number of units produced is 25,000. So we're going to divide this 319,600 by 25,000. And this gives us a unit cost of production of $12.77 per unit. So to produce each unit, it costs the business a value of $12.77. And you keep your two decimal places unless you're told to round off to the nearest dollar. Okay, so basically that takes us to the end of this session where we focus on preparing the income statement for a manufacturing industry. And we have also looked at calculating unit cost of production.
Like, share, and don't forget to subscribe.